property investors as a whole are rubbish at doing. They're rubbish at applying business strategy principles to effectively what is their business. It's very much thought on I'll buy a flat and I'll rent it out, okay, and then I'll do it again and I'll do it again. How do you turn that into a business? But just accept that fact. Your first development of whatever size will be your least profitable. Don't think of your business as doing this development. Think about it as doing the 10. You are rewarded proportionately to the complexity of the problem you solve. What do developers want? They want speed, ease, and certainty of funding. We're good at what we do. We've proven that our track record. And as a result of that, we've attracted hundreds of millions of institutional capital from loads of different sources. So we've now backed £850 million worth of property projects and agreed around 485 million of facilities. So it's quite a lot. There's the 10 million milestone, the 20 million milestone. Exactly, and we'd celebrate each of those. One thing the UK is brilliant at doing in terms of house building is building 200,000 homes a year. You're smiling already because you know the punchline, right? Fundamental problem is we need 340,000. You speak to any SME developer who are fundamentally entrepreneurs, you look out at any window and say, I can put 2 homes there, 5 homes there, 10 homes there, 20 homes there. This is the absolute lifeblood of how we're actually going to build enough homes.
Hello and welcome to another episode of Property People. Today I'm delighted to be joined by Mr. Mike Bristow. How are you, Mike?
Very good. It's great to be here. Thank you.
Good to have you. So quick intro. I say quick intro, although you're quite accomplished. So you're the CEO and co-founder of CrowdProperty, which is a leading specialist property development lending platform with over 18 years of experience as a strategy consultant advising leading international companies and private equity funds on M&A and corporate strategy. Introduced me to a really, really good book recently, which was The Trusted Advisor, which was hugely helpful. You've created CrowdProperty, which is a fintech PropTech innovator with a customer-centric approach to the property finance market, underpinned by technology platforms supporting rapid UK growth and international expansion. You're also doing stuff in Australia, which I always found incredibly fascinating. Your tagline of the business is one of my favorites: property finance by property people.
Indeed, it makes sense. I'm here, right?
Namesake, exactly. Namesake of this podcast. And the CrowdProperty mission is to support SME property developers solving the affordable housing crisis, which is, again, my main mission in the property sector over the last kind of 10 years or so. So before we go into your backstory, you've also won numerous awards. I'm always impressed every single year by how many awards you've been nominated for and that you're winning. You've supported almost $1 billion in lending, named Entrepreneur of the Year in 2020, Business Person of the Year in 2022 at the Midlands Business Awards. It's a real pleasure to have you here and share all of your insights.
Thank you. So that sounded quite long. Apologies for that.
One of my longer ones.
Thank you. Yeah.
But it's just a testament, I think, to everything that you've done. And actually, it was a lot longer. I had to condense it down, to be honest, which is fantastic, and which is why I'm thrilled to have you here and talk a little bit about lending and a bit about business and the property market. There's a whole host of stuff, but this is Property People. We also like to find out a little bit more about you and how did you manage to get to the point where you are at today. And the best place to start is at school. Who was Mike at school? What type of person were you? Did you always think you'd be a lender in the property market?
I probably didn't know what a lender in the property market was, to be honest. I don't know. At school, I kind of liked school, and academically, I did quite well, and that probably helped me enjoy it. But I also loved sport, and that was sort of really was sort of the academics and the sport piece really sort of went together, and I felt one of the big things you get from sport of whatever type is just the battle, the competitiveness, the teamwork, and all of that.
Absolutely.
And that's why, I mean, at home right now, I've got 4 young kids, and I sort of call it a cricket immersion program, right? And there's sort of screens everywhere, and there's always cricket on, right? And not trying to push it too hard, but immersive experience so that they sort of pick it up and love it, and that's working so far.
Good.
But I think that really gave me those two together gave me that sort of competitive edge that I have. and to not to a floor, to a to a good level that drives my motivation and my passion and commitment, and yes, a willingness and a want to win, but not at all costs. And I think that's a really important balance. But look, I love numbers, I love maths, I love sport, and following that, I went to university and did a 4-year master's in mechanical engineering, which is kind of like an applied maths degree, and then spent most of that running around the country playing sport for the uni, and running around the country running a business that I set up at university, which was
Running around the world, actually, now, isn't it? A little bit.
yeah. Well, exactly. So yeah.
So the fact that you were good at school, it sounds like you just by the intro, everything you kind of put your name to or you put your thought to, it seems to go quite well. Seems to be have a positive outcome. And when you're at school, academically, you're doing well. Which university did you go to?
University of Birmingham.
Birmingham.
Yep.
Is that where you grew up?
No. Grew up in Kent, southeast Kent, a place called Folkestone. I've a massive soft spot in my heart as well. So we get back there a little bit, and it's actually a wonderful place that's growing a sort of a great food scene and things like that. My parents have unfortunately passed away now, but we still get back there, and it's a very fond place.
The Garden of England, they call it.
Indeed. So it's.
And then, so with the applied maths, the degree that you, I did a little bit of further maths in my A levels, and I found that incredibly challenging. So to go to kind of higher education and start studying, how has any of that, and maths is a hugely kind of logical exercise. How do you think that any of that, what you've learned, which sounds like maybe a lot of theory as well, has helped you in the practical world in everything that you've been doing today?
Yeah, look, I'm numbers obsessed and data obsessed, and
Right.
and my team would definitely reinforce that, and I think the power of seeking insight from numbers and quantification is incredible, and that was kind of the principle of a sort of mechanical engineering degree. Is kind of like, right, you calculate a lot of stuff, and then something real happens about it. It wasn't theoretical physics. It was real maths in action, right? And I think that's pretty powerful, and that underpins, in my view, business and growth and opportunity, and how to spot those, how to serve customers better, how to deliver better economics, better commercials. All of these things come together. That fundamentally, if you have that grasp of quant, then it massively advantages you.
And if you're good with the numbers, you understand, where the weaknesses are, where the strengths are, where you should be focusing more of your resources. What about the connection whereby relationships meet numbers, where because numbers sometimes help you take the emotion out of a decision-making process, which I think a lot of people find that objectivity quite helpful. However, there's also that relationship element. Has experience taught you how to kind of connect the two, or is there a connect, or is it always good to be objective?
I think, and I didn't know you'd take this down this line, but almost that resonates with my first point, which is I liked maths at school and I liked sport, right? Because especially team sport, it's all about bringing people together, right? And if you're in leadership positions in team sport, fundamentally it is down to you to sort of, to use the sort of the obvious analogy, is to get the dressing room on your side, right? Yeah. and don't lose the dressing room. And the only way you do that is inspiring people to come together with a clear and shared purpose, right? That clear and shared purpose might be founded out of insight from analytics and etc. But you've got to gel people together. Not everyone resonates with numbers or just the logical argument. It's the inspiration that you put behind it as well. And I think that's where many people grow and develop as a leader sort of later on in life, when they're in leadership positions, sort of really understanding that. And you say, actually, is it about, right, which commercial opportunity makes best economics, or is it, culturally we can deliver that opportunity best, and that will position us in an advantageous way. Almost, as long as you're, applying the sort of sense check of the commercials, right? But actually, a lot of it is about how your team, how your leadership, how your culture can execute against an opportunity. And I think that really comes into play later on in life.
Absolutely.
And I'm seeing it right now.
I think that the marriage of the two is important, and it's no big surprise that actually you quite cleverly married the two with sport, because I also think sport is. I use a lot of sports analogies when I'm talking to people about business, and especially about team building and about different positions and different roles and culture and stuff like that. Have you ever seen that film Moneyball, by any chance?
I haven't actually.
You should watch it. Very, very good film. It's all about statistics. There's a baseball team in the US where, with very little resource, that they've got the drafting system there.
Yep.
So the weakest team went and got, with the lowest resource of money behind them, were able to look at statistics and numbers of the people that were able to get each of their teammates to the next base, and they basically performed well above their average than what they should have been doing. And there was a lot of numbers that were driving decision-making process and taking the emotion out of it. But there was also, with the people that were coming in that maybe had a bit of problematic thing or two here or there, they were able to pull the two together and achieve some great results. So my question is, once you've got these great skill sets, did you decide that you wanted to get into, at what point did you think property and lending would be the right thing to do?
So, there's a well-known thing that if you start in property, you don't then extract yourself from property. It's an incredible sector that you just get drawn into, and you're a property person, and you're in it for life. But I guess alongside my strategy consulting career, I was always investing in residential real estate on the side. Now, that started 23 years ago. My God, and it was, quite frankly, it was pretty easy back then, right? You buy a flat, you rent it out, you refi it 2 years later, right? Extract some cash, buy another one, and you could scale like that.
You could even refi 2 weeks later in some cases.
Yeah, exactly. And I was doing that from quite an early age, alongside my career. But I always knew that what I wanted to do was learn a bucket load of stuff first, right? I founded, grew, and sold a business at university, which was great fun and really insightful. And then felt I was looking at different career options and saw consulting as a way to experience different sectors, different companies, different success profiles of companies as well. You drop into poor performing and great performing ones. And you see so much. I mean, some of the engagements you churn through, some of the, like a private equity buyout, you might do deep commercial due diligence for 6 weeks, right? And you're sleeping, the sleep you get in the taxi on the way home at 2 a.m. is a material part of your sleep, right? But you're learning, soaking stuff up in a high pressure environment, and then churning onto the next one, right? And that was 18 years in total, right?
Wow.
And I just learned an absolute bucket load of stuff. But towards the sort of the end of that, after I did an MBA, and that was fascinating and inspiring as well, especially about the network you build out of that. Some of my best friends today, and they're dotted all around the world in incredible roles. But the point there is that I knew I'd go and set up something at some point, right? Having done it and then gone out to learn, right? What that was, I had no idea, right?
I just made a decision that I want to do something amongst all of my experience. Which way am I going to go?
Yeah, it was kind of like I'll spot an opportunity. Right. It was that open scope.
But you'd made that decision that you saw as an active, kind of wasn't kind of coincidentally. It was like I'm going to actively go and find something to commit to.
Exactly. And then I started thinking more about property, and especially post global financial crisis, and I started buying quite a few properties in and around Hackney, thinking about different models, trying to just outperform the market. Right?
Yeah.
And which, by the way, I think is something that property investors as a whole are rubbish at doing. Right? They're rubbish at applying business strategy principles to effectively what is their business. Right? It just, it's very much thought on I'll buy a flat and I'll rent it out, like I started, right? Okay, and then I'll do it again, and I'll do it again. So wait a minute. How do you turn that into a business? How do you think, right, what's my target market? Okay, what's the competition doing in that? Yeah. How do I outperform the competition and achieve superior economics, right? And then how do I turn it more scalable, right? So I can buy 1, then 2, then 4, then 8. Start thinking as a business strategist, not as just a property investor just buying the odd one. So I started growing a portfolio in that way with investors and things, and that was sort of interesting, right? Okay, you can outperform the market if you think more about it. Especially in a market back then, 80% of buy-to-let properties were owned by people who owned just one, the accidental landlord.
Yeah.
Yes, exactly. Hugely unsophisticated. So they're buying it and letting it out, right? So, well, why don't we, on a very simplistic basis, we'll buy it, work out who your customer is, install high-speed Wi-Fi, and you'll get higher rent, right? Flippant example, but that's real, right? And so as part of that, I was sort of, okay, that's feasible, right? Then it's like, well, wait a second, what role does technology have to play in property? And that's the bit that I started getting really interested in. So if you think about it, real estate is the world's largest asset class, right? It's a physical asset class. It's woefully inefficient in the transacting, the management, the exit, the data provision, 100%. The decision making, everything around it. Woefully inefficient, under-optimized, under-potentialized. And that's where technology could play a really interesting part. So I started getting familiar with what's going on in technology application to property. And a couple of years, I'll refer to something that in a McKinsey report, a few years later, there was a McKinsey report that said the adoption of technology in real estate is the equivalent to adoption of technology to basic manufacturing and agriculture, right? It was a damning report. I used that in a presentation in front of property people, and it didn't go down very well. But that's another point. But so the hypothesis is right.
It's old-fashioned, and it's
and there's just so many efficiencies you could bring, right? Yeah. And so I started investing in PropTech businesses, early stage PropTech businesses, and started getting really interested in that. And thinking, okay, there's this opportunity here, right? And then I got close to a venture capital fund, and actually now I sit on their investment committee and I sign off every investment. It's Europe's most prolific venture capital fund in PropTech, or the innovation in the built environment, we call it. But the point there is, right, there's technology application across the huge spectrum that is real estate. This PropTech moniker has so many dimensions to it, right? I was fascinated by fintech as well, and the efficiencies you can bring to financial services, right? And then the final sort of insight was quite frankly, for a small developer, it was a pain in the arse to raise finance, right?
Yeah.
And you piece those together, and because a lot of my background when I was advising on buying and selling businesses, a lot of it was in retail and consumer goods, right? I'm glad I didn't stick in retail consulting that long. You can sort of see the dearth of that overall. But what that meant was I was laser focused on getting quantitative insight from customers about how the proposition should be shaped to serve them best, right? And I think financial services is rubbish at that, right? And so there was technology in property, there was financial services, fintech, there was pain amongst developers, right? And the competition weren't as focused on the customer as they should be, right? And you piece those together, and it's like, right, I'm going to set up a dev lender. right? So
Makes sense. Makes sense. When you piece it all together, I can imagine the film and the biopic for Mike Bristow in that scene where suddenly all of these different things are coming together. He's scribbling down all these notes and creating this kind of spider diagram, and it all kind of like, oh my God, that's the moment.
Yeah, and you know, and those insights are absolutely true to this day that we talk about on a day by day in our big team. And it's right. How do we make that more efficient? How do we make the cost to serve better? Right? How do we serve the customer better? How do we get more insight to shape our product development or our service offering? How do we use data to outperform the market? You know, all of these things are entirely consistent through the growth trajectory, and I think that's a core piece of why we've been a rapidly growing business.
Yeah, and you really have. I mean, we're a brokerage at Merry Oaks, and we've used CrowdProperty, and it's been a really good experience. So we'd encourage other people to explore working with you. But it hasn't been an overnight success. And I remember we spoke, I think it must have been about 5 years ago or so when we first, I think, connected. And the earlier parts of CrowdProperty in that journey, compared to the last, let's say, 5 years of growth, were a lot slower. And then it's kind of that night tick where it's literally taken off. But the first 5 years, I can't remember the exact numbers, but I think it was like £30 million worth of lending over that time. And it was also very much a P2P platform. So those earlier days, if you could talk us through why you started with the P2P strategy and why those first few years were so slow compared to what we've seen in the last years, where every single week I'm seeing kind of more and more loans being completed. Which is and all really, really good quality ones.
Yeah. And that's the crucial piece, right? We still filter very, very, on a very, very tough underwriting process to get through. We just see a lot. Right?
Yeah.
And that's one of the data and analytics pieces that underpin our business. But early days, we said, as you start off, right, you've got to be really clear of how you're going to get the confidence to move to the next level, right? So very early on, we distributed through known networks to say, right, can we back some of those developers? And they said yes, right? And we were building our underwriting capability. We were building our technology platform. All of our tech is in-house built, proprietary over the last 9-10 years.
Amazing.
Right? So and we've got an incredible engineering team behind that. And look, it was all about, let's prove this, and let's prove this. Let's prove that we can attract a developer. Let's prove that we can successfully underwrite and deliver on that loan. Let's prove that we can attract capital. Right, I'll touch on the P2P point in a second. Let's prove that we can manage that loan. Let's prove that we can manage it in a secure and robust way through the control processes that we implement in our business, right? And let's prove that we can redeem, right? So, and that sort of period, that takes a bit of time. So all of those things we were sort of working on, and we had quite a small sort of early team, just ticking off those proof points, because those proof points are really, really important for not only the potential of the business, but also the humans involved. Right? Not only the founders, the directors, but the people who are employed in the business. You know, are we building confidence that this is going to grow and be an exciting thing to be in? Because that's how we can attract great talent. And so we're just ticking off all of these things. I've forgotten the trajectory exactly on the numbers. But we were growing. It was something like I think over the last it's from a very early sort of stage, but we probably hit, there's the 10 million milestone, the 20 million milestone, exactly, and we'd celebrate each of those, and we'd fund the projects and all of this. And I'll come back to the point around the P2P piece. So we were a business that had brilliant property expertise. The sort of the early core team had great development expertise. Right, but we weren't in a position to go and close a 100 million institutional funding line. But what we knew we could do is reach out to the networks that we had intrinsic to the people involved and say, well, look, you could put some money in. Here's the development. Here's information about it. We'll secure it for you. We'll manage it. Would you like to put some money in? Right?
Yeah.
I used to work with one of the founders of Funding Circle, and got quite a lot of influence from James, actually, spending a bit of time with him to understand how they sort of really set that up. I remember him 2009. He was working in one of my teams and saying, right, what do you think of this, Mike? It's like, I've no idea, James, but it sounds like a thing that could be fun to try, right? Wind that forward. They floated at 1.5 billion.
They did incredibly well.
But I mean, it's well off that now. But that was where that democratizing access to a lending asset class that would be secured, in our case, secured against real estate. That what we called it was most efficiently matching the supply and demand of capital. That sounds like a terrible sort of businessy phrase, but it's basically saying, well, look, if a developer needs capital, and ultimately every pound or dollar or whatever, or yen is owned by an individual, right? So rather than that individual putting it through, various different hierarchies of the financial services sector, right? What if they just lent directly to the developer, right? You build the fractionalization and payments technology in between it, and you really unlock that asset class for people to put small amounts in. And actually, the benefit of small amounts is that they could put that larger amounts in small amounts across many different projects, so you diversify the risk. Wonderful, right? Then we could offer ISA products, pension products, especially SaaS pension, all of these sort of different routes and different sources of capital ultimately that would earn individuals a better return on their money because of that efficient matching of supply and demand of capital. That was a sort of fundamental sort of hypothesis that said actually that's good, right? And then over time,
so that was the advent of kind of P2P things, especially going online. And
we were right at the front of that.
Yeah, exactly. You were really early days.
Yeah.
So it kind of makes sense though as well. You were kind of starting small, just building the mechanics, seeing kind of what was working, what wasn't working, and filling a gap where people were looking for returns. The Bank of England was kind of at 0.1 or whatever it was, 0.25 for many, many years, post global financial credit crunch. And you decided, okay, let's put this, and then once the lending business was kind of up and running, and the first few years, what were the big challenges that you had from borrowers? What was the and even today, like, because when you associate yourself with being a peer-to-peer platform, some people think that I know. What happens if you don't get the money from these people? Like, how am I going to get the money? So what are the biggest myths that you find that you come across that like just not there's a business called Lendy that went bankrupt and and there's a few others and stuff. And how have you navigated against those things? This episode is sponsored by the PLMD Group. PLMD Group is made up of the PLMD Development, PLMD Estate Management, and PLMD Capital, providing expertise in real estate development combined with asset management. With more than 70 build-to-rent properties and £20 million of assets under management, PLMD's extensive knowledge of local planning policies have resulted in a strong track record, turning liabilities into valuable assets. The group delivers value through a fusion of experience, innovative design, imagination, hands-on management, and sustainable resources. To find out more about PLMD and the services they offer, head to plmdgroup.co.uk.
Look, fundamentally, we're good at what we do. We've proven that our track record. And as a result of that, we've attracted hundreds of millions of institutional capital from loads of different sources, right? British Business Bank as well. Effectively, they leverage our fractionalization technology to get their money to support small and medium-sized developers, and their money is leveraged up with private capital, other sources of institutional capital, etc. The vast majority of our capital comes from those sources. which is exactly the same as the entire non-bank lending sector.
Yeah,
right?
Yeah, exactly.
But with a massive difference, right? And I'd been banging on about this for years. I bang on about a few things, about how diverse source of capital is important, right? So we've got multiple major institutional backers, right? And tens of thousands of platform investors, right? And so, yeah, as I say, vast majority is from institutional backers. During COVID, for example, some lenders, non-bank lenders, who had one institutional funding line, guess what? If they decide no, they're not a lender anymore.
And that happened.
It happened all over the place.
They're usually the first people to pull out the market when there's difficulty, when there's something not quite right, and everything dries up. And it even happened during COVID just recently.
Exactly. Yeah. So it was. They didn't have diverse source of capital to risk manage in any individual source of capital pulling out. Right. It didn't have the right funding line agreement structured, right, that has that commitment, right? And what we saw during COVID was, and I'd never mention any names, but a load of lenders basically saying, well, look, no, I'm pulling the offer now because whatever reason, well, the reality was that they'd lost their funding line. We saw instances where people were refusing drawdowns on projects, right, because of that exact reason, right? And if you're midway through a project and you don't get a drawdown, you're not paying your staff, the contractor's off-site immediately because it's like you're not solving that quickly, right? And the developer's screwed, right? So that fundamental reliability of capital is absolutely vital, right? And that is the diverse source of capital that we built, right? So in every way, that is a far superior structure than the typical non-bank lending structure, which is one, maybe two sources, sort of individual funding lines.
So you've pretty much overcome that by, okay, yes, early days, it was one source where we had the fractional peer-to-peer style of funding, but we've managed to do that really well. We've ridden a wave, but we've actually now solidified our future uncertainty by creating even more certainty than anybody else by having multiple streams of income and funding.
Exactly, vitally important. What do developers want? They want speed, ease, and certainty of funding, right?
Couldn't have said it better.
and those are fundamental tenet to what we focus on. And speed and ease you can really unlock with having a laser focus on your technology proposition, right? Yes, your people, but underpinned by technology.
We're in the 21st century. I think anything that isn't technology driven or enabled, it's going to be falling behind.
Well, yeah, but I refer to my previous comment about adoption of technology in real estate, right? So there are still in every pocket of every industry, right? But including in property lending, there's a bucket load of spreadsheet lending, and where there aren't spreadsheets, development finance lending, which is really complex, right? Really complex, is then just shoehorned into a generic lending system.
Yeah,
right?
yeah.
So those two things make the current provision almost like right across the board totally unfit for purpose, right? Unfit for execution against what the developer fundamentally needs, right? Not necessarily on a loan by loan level, right? Because I'm not saying that everyone's absolutely terrible. I'm saying the customers are underserved, and I think they're still underserved.
Oh no, I'm a broker, and I deal with so many different lenders, and I'd say the vast majority of them are not tech-enabled, still doing things the old-fashioned way. We're in the equivalent of the 1920s of the 20th century, and we're in the kind of earlier stages of going down that route. So there's certain innovators like yourselves that are really trying to speed things up and make things life easier.
And the interesting bit, because referring back to our mission. Our mission is to unlock the potential of small and medium-sized property developers, right? To build more homes, to spend more in the economy. They're a huge contributor to the economy. Every home that gets built is worth about £100,000 worth of spend on labour, materials, and services in the economy, right? A year and a half ago, when we missed a technical recession by £75 million worth of GDP, that's 750 homes, right? So if we hadn't kicked off those 750 homes, that would have been a technical recession, right? Yeah. Obviously, you can attribute that to any area of the economy, right? But the issue overall, fundamentally, one thing the UK is brilliant at doing in terms of house building is building 200,000 homes a year. You're smiling already because you know the punchline, right? The fundamental problem is we need 340,000, and if you break that down, you say, well, look, we've got lots of volume house builders, great, but if you think there's only a scarce number of large sites, and every one that gets built out reduces that supply of large sites that volume house builders need. You speak to any SME developer who are fundamentally entrepreneurs, you can look out of any window and say, I could put 2 homes there, 5 homes there, 10 homes there, 20 homes there, right? This is the absolute lifeblood of how we're actually going to build enough homes, right? So that's our focus. Our mission is unlocking that. Linking that to the scalability point, right? The problem is that anyone that's good at development finance, right? They've basically said, great, I'm good at development finance. I can get some more funding lines, you know, et cetera, right? But, I just can't deal with more loans. So I'm going to do bigger loans, right? It's what the banks did 20 or 30 years ago. You know, they're just doing 20, 30, 40, 50 million pound deals now, right? It's what a few of the good players in the last sort of, 5, 10 years, they've said, do you know what? I've got a loan book of 50 loans, I may as well, rather than averaging 2 million, why don't I average that at 12 million? And I've got a 600 million book, not a 100 million pound book, right? That's logical, right? We've said we're going to tackle the hard bit, right? We're going to keep our average. Last year was at about 1.8 million. I reckon long run, our average will be about 2.5 million average facility, anywhere between 100K, largest current is 9.3 million. We can do larger than that, but we're staying focused on that market, and we've processed however many, 450, 460 facilities now, right? So we're doing the hard bit by saying we're going to be the great player in that fragmented space that underserves, because by definition, the people that sort of left in that space are the ones that actually, well, we're okay at it, right? But what we want fundamentally in this country is a brilliant dev lender serving that SME market, distributing more reliable capital, distributing efficiently and scaling, right?
So otherwise you've got a monopoly of these bigger house builders, and then there's land banking, they're just doing the kind of safer deals. And then like all those little 2 here, 2 there, all those SMEs, which is the life and backbone of any good capitalist country, they're just not getting served. So the fact that you've decided to tackle that, and is it that, because I've been in and around lenders that, yes, they do well, and then they say, you know what, for the amount of legwork, we don't want to grow the team, grow our overhead, more people, more headache. We just want to do bigger loans.
Yeah.
Have you been able to cover the extra workload with harnessing that technology?
Yeah, very much so, very much so. And there are massive compounding effects of solving that as well. So, we see about 350 million pounds worth of applications a month, right?
350 million pounds worth of applications per month. Wow.
Which we think is probably most in the market of any dev lender, right? Except for the ones that are taking 400 million pound applications a month.
Yeah, but still, we're talking about billions of worth of loan applications, multiple billions.
And we're building incredible data sets, incredible machine learning, incredible stuff that nobody else has built in the market, right? And that gives us better insights to what's going on, better insights to who's out there doing stuff, better insight in terms of what success looks like, better insight in terms of how should we think about, right, that's a high likelihood one. This is a lower likelihood one. Let's focus resource and effort on the higher probability one, etc. And ultimately, the projects that are likely to end up to get funding because they are better projects executed by better developers, we're able to serve that better and better in spite of such volume coming through our system and volume through our book, right? So, and that's scratching the surface, right? It's just an example of how that data tech and advantage really plays out in terms of serving SMEs to build more homes.
Because that was one of the questions that I had, is that other lenders, what are the biggest mistakes that they're making? From what you're telling me, it sounds like they're just not using technology at all, or not necessarily in the right way, or not innovating fast enough. Would you say that's fair? Is there any other big mistakes that they're making that you see?
I think fundamentally, they're not tackling the hard bit, right? I do genuinely believe. Actually, it's an Elon Musk quote. Actually, I don't go around quoting Elon Musk, but it just made me think about this. And his quote was, "You are rewarded proportionately to the complexity of the problem you solve."
Yeah, well,
right?
I
Okay.
agree with that.
That's a wonderful statement, right? Because in simple terms, do the hard stuff. There's less competition, right? And you can excel on it, right? If it's in the right circumstance, right market, right, et cetera, et cetera. And I think that is the core of what we are doing. In that, so if you look at something like a funding circle or like a consumer loans business, right? You can algorithm that lending. You can't algorithm dev lending, right?
Yeah.
And if I said I was algorithm dev lending, then my investors would be running for the hills, right?
It's very challenging. Maybe in another 50 years from now, where these AI bots are doing kind of that, 100 times more intelligent than they are today. But I think I agree with you.
You can get decision support. You can get process efficiency. You can get all of these things. But fundamentally, right? It's hard to build a scalable dev lender. So we said, well, how do we do that? Not, okay, well, let's
do something else.
Yeah. And when you think scalability, you also have to think robustness and control and governance and all of these sort of fundamentally important things, because there's a lot of money flowing through our platform. And also, but it's like, how do you make this fundamentally scalable? Well, nobody has cracked that challenge, right? And so that is red rag, right?
Challenge accepted.
Yeah, exactly. And that's the mission we're on, and we're getting better and better at that every day. We're proving that more and more every day because we've just been showing stellar growth and slightly less growth in 2023, but consistent growth versus the market, right? Because the market was down, fewer developers were shopping. We were talking about that earlier.
Yes.
And then things like launching into Australia to sort of prove that backbone, prove that international scalability as well, which has given us amazing insights into that market.
And how's that going?
Yeah, good, really good. Actually, the local CEO David was very proud. He was asking me for some data on the UK business and trajectory or whatever, and he said, and then he came back to me at the board meeting. He said, "Oh, well, the reason I asked for that is I wanted to come back to the board meeting and say, well, we've got to the market traction, which by proxy is applications coming in that you guys did in the UK. It took you 4 years, and it took us 18 months. And it's like brilliant. And that's exactly what I want to hear, because fundamentally, a lot of that process, a lot of the time I spend with that Australian team is saying, yeah, this is the challenge we faced then. Think ahead on this challenge. This you'll face. We cracked it like this. You might want to look at it like this is slightly different, tailored for market. Whatever those are, those sort of that spotting, that real learning that can grow that business far quicker than we did in the UK.
And you're with the underwriting aspect, because that's what I think a lot of SMEs especially are looking at, going, how can I get my deal funded? What do I need to have? What's the most important thing? From your point of view, CrowdProperty's point of view, what sorts of things are lenders looking for to underwrite a deal?
Yeah. So, look, first and foremost, this comes back to our point about meeting quants with people, right? It's the people, right? We can analyze the locality of the market, the business plan, the cash flow model, and get to precise answers. The imprecise piece is that, it's usually, and I'm not being specific to development here. In general, in everything, it's usually the human that screws something up, right? It's
Or makes it work.
yeah. But exploits the opportunity. So
Yes.
in actual fact, you look at a brilliant developer can turn an average development stack business plan, right, and outperform. The sort of if a developer lacks the ambition, the motivation, the ability to dig deep, to problem solve, to risk manage, etc., then the best project in the world on paper could not work.
Yeah.
So we engage really closely with our developers. Again, we're passionate property people, right? We live by that term, right? We're not bank underwriters. We're property people.
And from your management consultancy days as well, again, you're looking at great businesses that potentially on paper look, but then you look at the management team as like, who's going to drive these numbers, right?
Exactly. And in private equity buyouts, right, that is a massive factor. Right? Fundamentally, you're kind of backing people, right? Private equity and venture capital has this sort of reputation, I think, that comes probably from the 80s, the sort of Gordon Gekko eras of like hiring and firing, right? No, private equity backs management teams doing whatever they're doing to drive economic value, right? And those management teams are usually proven problem solvers and proven drivers of growth, et cetera, and that's what they're backed, right? And this is especially the case when as I say, sort of my non-exec type role is sitting on the investment committee approving every single one of our investments at Pi Labs Venture Capital Fund. The conversations around that are, yes, this in principle works. Yeah, the market is in really good shape. The competitive environment, there's real opportunity in whatever sense. But is that team, that founding team, based on all the reference points we've got, are they great at solving the problems that they will face on their journey, right? And that's, that happened. It's a problem-solving exercise.
Do they have the character? Do they have the steel? Do they have what it takes to be able to deliver?
Exactly. And often that I sort of simplify the terminology. So are they going to dig deep and solve stuff and, quite frankly, get shit done? Right?
Get shit done. We like that. Because this is the thing. So I know that one of the things that I like about CrowdProperty when we approach them is that you will look at inverted commas first-time developers. That's a category of type of developer. I come across it regularly though, whereby I have a philosophy of start small, think big. I think it's similar to how CrowdProperty have kind of grown as well. But some people want to skip a few steps, and they want to, let's say, take on a £5 million loan when they haven't got that background. I've spoken to you before about this sort of thing, and with your approach, it's not a hard and fast no necessarily. So if somebody is wanting to do something that's perhaps a bit larger than what they should be doing, how would you look at it to say, okay, I think we could make this work? What sort of things would you need to see?
A lot of the focus would center around the team that they pull together, right? Because if you're taking on something pretty big, right, and you're less experienced than would be expected to execute on something that big, we don't have tick boxes to therefore say you must have this, and this. What we do have is a good dialogue with that developer to say, you will increase the probability of your success if you build your team out like this, right? And that, some people will say, oh, great advice. Okay, that de-stresses it, it brings the expertise in, especially if they incentivize that, the team on execution and delivery, right? There's no better way than to structure something like that. But then if you step back and think more strategically around what they're trying to do, is don't think of your business as doing this development. Think about it as doing the 10 developments or whatever on your journey, right? And almost certainly your first development of whatever size will be your least profitable one, right? Now that'll be driven by the market you're in, right? But just accept that fact, right? Just accept it, that you're on a journey and you're building a development business, right? And if you accept that, then what are the things that you need to build in order to, in 3 years' time, say, be doing 4 sites at the same time, right? Where you need scalable infrastructure, scalable team, expertise, etc. So build it now. Get to know the people, right? If you bring on a team of, say, 4 people, you know, whoever that is, whatever skill sets you need to bring in, okay, there's a reasonable chance that, there's you know, you will get to know all of them, right? Most importantly, you'll know whether you want to work with them again, right? So say it's sort of like a poor hit rate, right? You bring on 4 people into your team, right? You know, not necessarily as equal partners, right? And half of that works, right? Okay, so you've got already 2 people in place for your team on the next one, and you would have learned what didn't work, right? And you would have learned from the team you didn't want to work with anyway to really understand, okay, that skills gap I had, have I now learnt it, or do I know more about it? Can I outsource it differently? Given I know quite a lot about that now, do I just bring a more junior resource in to execute against it? You know, you start to map this out to ultimately build a team that says, right, I can get to my 10 developments or my 20 developments or whatever. So it's reframing the whole piece.
And do those expertise include things like balance sheet? So, you know, property is probably development is an incredibly cash-intensive game. Things go over budget, things run longer than they should, which increases interest cost, etc. And typically, a developer would need to rely on themselves to put in that extra cost. They've got PGs on the line and all sorts of other things. And so building it, you know, I've not done maybe a site of 25 houses, but I know a contractor that, and I know a project manager that's done 50 houses and they've done loads of them, so this should be a doddle for them. We can maybe piece that team together. Things like the balance sheet as well, is that also important that they, might not have the balance sheet, but maybe they can bring an investor that does so that they can be relied upon? It's like the whole piece there, the picture.
And yeah, exactly. And, you know, whatever people are bringing, resources, capabilities, expertise, whatever, it's all part of building the team, right? And, you know, and one of the resources is capital, right? And we won't give developers all the capital they need. We're a senior secured lender. They will have to find other capital. We want skin in the game from those individuals, but we're property people that understand that in property activities, people bring on investors.
Absolutely.
And as long as that's clear and open and we understand that, that's great, right? So all of those things basically result in us understanding the deal structure, the individuals, on more than just a quant basis, but on a qual basis, to really sort of piece together the picture, right? The picture. And is this a proposition overall that we would like to support?
Relationships are important.
Yeah.
Something that I think I spoke to you about earlier today, that I was kind of like, oh my God, I just had a bad experience with a relationship. I mean, I value relationships above pretty much everything else in the foundation. And if you've got that chemistry and you feel like the picture makes sense, it's whether the people and the quant, you say, kind of meet.
So now that's a really good point. So the other bit we saw really early on, or it's almost like a fact or an indicator of one of the points I was making, that nobody in the development finance sector was really serving small and medium-sized developers well, right? Retained business is terrible in this market, awful, right? And it just doesn't make sense to me, right? You know, other than, well, that is a byproduct of poor execution and poor service, right? There was a bad experience over an extended period of time, say 18-month project, bad experience that developer will not use that lender again. Wow, right? Okay, because the lender is part of the team as well. What you want is the next one to be nice and easy. You can, right, okay, no, I know who's doing that, I know who's doing that, I know who's doing that, and one of those is I know who's providing the capital, right? So 41% of our lending is to people that we've that have borrowed on at least or at least one project. Right?
Amazing. That's a really good level. Yeah.
That is a market leading position, right? I say, so what do we put that down to? Well, the hard work and the supportive nature that we put through the portfolio piece, that deep relationship piece, not just the upfront, here's the capital, right, see you in 18 months, please pay us back then.
I vouch for that, actually. I know a number of people that have used CrowdProperty and all have said that they would be using, absolutely consider using you again. So that is testament to that. With regards to, you mentioned origination and the importance of that kind of almost, let's call it top of funnel. If you can see £350 million worth of loans every month, there's almost a guarantee that you're going to have some quality loans in there that you can then close on and do some great business. On the origination side, I ask this to all lenders, especially coming from my background. Should a borrower go directly to a lender or should they go through a broker?
It's a great question. So it's
a very subjective question from my part.
Yeah, exactly. I'll tread carefully on this. Look. Some deal only through brokers, through intermediaries. Some will accept direct, and we do. We build.
Some lenders won't go directly to the borrower. They need to have it broken. Some work directly, and I've worked with a lender that we work directly, and we work very well.
And look, we do work directly. What we do, there's no doubt that it's helpful to scan the market. The big thing in dev lending is you need to know a lot about that lender. You're getting into bed with a lender, right, that is so much more than a commodity buy-to-let interest rate.
Or even a bridge is like, hey, take the money and I'll see you in 12 months type thing. Hopefully we get the money back and we'll keep in touch. It's an ongoing...
It's an active relationship, right? And, so understanding that, brokers have good perspectives of that, right? Who, work well with developers through the period. How do people act when times are getting tough? All of these sort of things. Brokers have a really good lens on that. As do other developers. That actually that research on what's that experience like is really really important. So look, we work on both bases, and I'm very open to both bases. So it really is up to the developer.
Absolutely.
So
good answer. Leave it to the consumer. We're in the capitalist market. The consumer is king.
Exactly.
So,
but beware of just beware of the middle ground, I think, right? And the middle ground is a crude price comparison exercise, right? Because it's not a price, it's not a commodity. That's the bit that I think is really important to understand in this sector in particular.
Yeah, I think it is important. Nothing wrong with the average mortgage broker that's in an estate agency doing residential mortgages, but if they're trying to broker your development deal, even if it's a small refurb, you may want to look for somebody that's a little bit more appropriate. One thing, though, again, about CrowdProperty, not to sing your praises too much, but it is, you're all property people. Founders yourself, you're all investors yourself, and therefore you understand that, and then that's kind of fed down to the culture of the team beyond that. So through this...
And it's a sizable team now, so it's...
How many are you in?
50 in Birmingham, 10 in Sydney. So that's a well-resourced lender.
What's the current count? Because I know it's going up kind of almost on a weekly, monthly basis in terms of how many loans you've put out into the marketplace today.
So we've now backed £850 million worth of property projects and agreed around 485 million of facilities. So it's quite a lot, and it's those numbers are now ticking over quickly. So it's at the end of the day. So I haven't got the number to how it's something like 3,600 homes, and we're very proud of that in particular. I refer to the whole point about house building and the need for house building in this country, executed by small and medium-sized developers, and internally, however, whenever we celebrate those numbers, the next statement is always, and this is just the start.
It's just getting started. That classic.
I'm not very good at looking back. I look forwards, right? That's just the start, right? So there's a huge
it's true.
potential here.
The affordable housing crisis is quite chronic at the moment. I mean, we haven't even got into planning and a whole host of other things. But I'm quite comfortable and confident that I would be asking you to come back so we can get into a lot more of that detail. For the moment, there's a quick fire kind of question round. What is the best piece of advice that you've ever received?
It's probably focus, okay? Because if you can't be the best at something if you don't focus. You don't see Federer on the golf course, right? It's a bad example. It's such an old
Michael
example,
Jordan tried baseball, though.
That didn't turn out well, right? But that focus piece is paramount, because fundamentally, this maybe harks back to my competitive point is you've got to be the best at something, right? And whatever that is, it doesn't matter. But focus on it, do it brilliantly, tackle the hard challenges, and that's what will get you that the sort of growth because you're doing things better. That was a long answer to your quick fire question.
No, it's a good answer, and I 100% agree with it. What's the worst bit of advice you've ever received?
Ooh. I've no idea.
I think you're generally such a positive person. It comes across that way. That it's like
I've never been asked that question before.
Anything that has been bad advice, probably just blanked it out completely. Never thought about it ever again.
Exactly. Auto filter on it.
Yeah, exactly. Yeah. Fair enough. And what's the right? So you're a successful property person. There's no doubt about that. There's no question about that. And a lot of people that are watching this are at various ends of the property investment, development, finance career. To be a successful property person, what sort of traits do you believe you need to have?
I think just think smart, right? Don't just buy flat, let it out, right? Think about it, okay? I think it's so one of the trends in the market right now is developers keeping more of their developments as a long-term portfolio builder, wealth creator, right? And investors moving more into projects, maybe to this extent of full developments, right? In order to keep, right? And the benefit of that being they're building it for the market they know, so they can outperform the market, outperform the room rates, the letting, the rental yields or whatever, right? Think about it as a business. Think about it as a strategy. Think, the core tenets are: what's my market? What's my competition? What does my customer want? And what capabilities do I have? Right, and if you think really hard about those things, you can outperform the market. Right, so think much more about that. Think think about your property business in terms of business strategy.
Good advice. Thank you so much for joining us, Mike.
Pleasure.
I would love to have you back because there is so much more about solving the affordable housing crisis, which relate to planning, and I know that you're ingrained in so many different things. I think I saw you outside of 10 Downing Street recently.
Correct, yes.
What was that about, very quickly?
So I've joined the government's Small Business Council. Basically supporting, how does the government think more about supporting small businesses? At the end of the day, it's there's 5.7 million small businesses. It's 99.9% of business count in the UK, and that's a £4.5 trillion turnover bucket of businesses. How does the government work better with them?
You're certainly an important part of the property market here in the UK. So I'd love to talk to you more about all of that sort of stuff. But for now, thank you so much for your time.
Thank you, much appreciated.